All right. Hello, everybody. Welcome to another webinar. This is, I don't know if you guys saw, but I posted like two case studies this week. I just made them public. I said, whatever. I did two this week because I didn't do one last week. I've just been so busy recently. Just been working on a couple of things. I'll actually show you guys one of them. I can't show, I'm not going to show too much, obviously. I'm not trying to kill the surprise, but I'll show you guys something. Um, But yeah, we can go ahead and start here. So if you saw, I think this was Tuesday. Yeah, Tuesday's video, I think. If you saw Tuesday's video, you can see that we discussed the bias for EU, and previously before that, we even talked about like the DXY bias. So if you guys want to go check that out, that's there. But pretty much this is kind of how I go about all of the private webinars these days. Like I kind of just talk about my bias, talk about some positions, and then see if there's anything pending. And then the other thing that we talked about, so I'll just go ahead and hide that, is UCAD. We'll come back to EU, right? So we were talking about UCAD potentially being a continuation across the entire top-down spectrum, where we were pretty much looking at bearish trend on the weekly, which is on your position. On your swing, you just swept that previous or those equal highs. And then from an internal POV, a major intraday POV, we can see a clear structural legs. So although we are still technically bearish, I was anticipating for this to be an immediate continuation. I would have liked for this to be an immediate continuation, which would have resulted in the continuation, right? Based on a minor intraday standpoint. But because that's not the case, now I'm kind of uninterested in general with this. Why? Because this break of structure signifies that we have unwillingness to the downside. So if we have unwillingness to the downside, then we technically cannot justify a bearish move until we see some type of failure, right? Unless I see some type of failure, and like I'm not even entertaining that because look at the momentum that started picking up, and this momentum is thanks to dollar, which is what we talked about also on that video. How we were anticipating for this to now pretty much start going for that 100 mark, especially since we have been pretty bearish. Bearish, sorry, pretty bullish for like the past. I don't even know when. Let me pull up the chart for you guys again. It's like January. Let me find that chart for you guys. One second. Uh huh. Found it. So I've brought this chart up like a couple of times over the past like couple of weeks. This was back in January, how we were anticipating the potential accumulation to be formed. But obviously, at the time, we can't really justify anything after this because if this current order flow is bearish on this bearish trend, then this is the reasonable target. What happens after the target is completely dependent on when it hits the target and how. So this is kind of progressing nicely, right, guys? If you guys been paying attention to this, it's probably the best call out I've like ever made. I'm not gonna lie. Um, let's see. Then this is where that target met. But unfortunately, if you guys remember, we were looking for like immediate continuation. So unless you were actually very meticulous about looking at this internally, we couldn't really catch something there. Because this is the daily time frame. But that is playing out pretty well, right? Pretty cool, right? Seeing that play out, guys. Yes, no, maybe so. Have you guys been paying attention to this? Guess not. Um, yeah, pretty cool, right? Pretty cool seeing that kind of play out. I just think it's very interesting to see this stuff play out. But like, I want to be able to give these biases and let you guys see them play out because I think that's more valuable than giving an idea. I really look at the DXY. I mean, it depends on what you trade, bro. But yeah, I typically like to give these like ideas out there and explain them, because if they do play out, then they're actually very, very good from an educational POV. But if they don't work out, like let's say UCAD, then we can figure out why. Like there's usually like a good why, especially if you're conservative with your biases. And what do I mean by conservative? Like there's multiple ways to look at conservative. It's like if I want to be conservative, then clearly if we have a reaction here, then the reasonable thing to say, or the reasonable effect of this cause, is to reach a previous low. Like it's the simplest way of putting it. But if you want to get aggressive, then you start to anticipate after that as well. Like if you're anticipating this while you are here, it's aggressive and unreasonable, just because even if you are right, you just don't have sufficient data and information to judge that, right? Because maybe this is like an external bear bullish trend, right? And then we're within a POI. So you're anticipating for it to reverse here. And this is still aggressive because the internal is still bearish, right? And that's why like continuations, reversals, they're both the same. It just depends on what levels you correlate. Like you could say you're playing continuation here, but if you zoom in here, then it's a reversal. Feel me? So to be conservative is to just kind of essentially use the available information to create the next reasonable action. And then after that, it's just a lot of things can happen after that, right? Like there is like a moment when where is my Safari? Where this had happened. This had happened and it looked like we were probably just going to continue lower just based on the high momentum internally, right? And because of that reason, then I can't really assume that this is going to happen. I have to wait for that to happen. And that's why if you've been watching the webinars, or if you've been watching the case studies over the past couple of weeks, ever since we've been tracking this, like there's always been a bit of uncertainty up until like last week. And the uncertainty came from the conflicting biases of the different levels of structure. So like, yes, we reacted from the spring. Yes, we created a substantial new low, but the internal order flow is technically bearish. So if this is internally bearish, but we just swept, that's conflicting, because the sweep is a bullish bias, but the internal is bearish, right? And especially because we're on the H4 and we're considering daily lows and highs being swept. So the overall environment is a bit unclear. That's why these reactions from the POIs, right, are pretty much small clarifications, small bits of information that could really benefit us to see where we're going immediately next, right? And obviously, this reaction, we can know we're probably coming here. And I know we discussed this in the past like webinars. If you just go to like the dates, um, I know we've discussed that, and there was also a conflicting thing where now we pretty much said that if we are to pretty much blow past this POI, especially breaking here, like now we're most definitely going here, and that's where we are now. So now, if I'm looking at this from the current POV, like what is the next reasonable approach? Well, like this is like it's a bit late now for the bullish bias. Like the bullish bias has already been established. That's why we've been looking for these sells. That's why weeks ago we've been looking for sells on GU, because we had swept daily highs. And even if I didn't catch the whole move, I do not care. Like it does not matter if you catch the entire move. What matters is that you get any kind of move. If you're able to create a bias and execute on a bias, it's the only thing that matters. But now you guys are starting to see why I was kind of going counter trend to the internal, because of the external sweep, right? And internal and external is relative as well. It's relative to the time frame, right? Like the external of H1 could be the internal of like the daily, right? And now it's kind of starting to become, it's gonna kind of like come into full circle now, so you guys can kind of see this play out in real time. Um, but yeah, that kind of concludes that little rant. Now you guys see why we've been looking for these types of moves, and now like this one, I don't want to talk about this one, but with this one now, based on where we are now, look at what this weekly has been doing. So now the next reasonable thing is to take this out. Why? Because If we're looking at a bullish range, we sweep one end, then you have to sweep the other end, because if you fail to break one side, then you have to go to the other side to get liquidity to then continue higher if you are to go higher, right? I don't care about this right now. I care that this is the low that we're next pursuing next week, right? And that doesn't mean sell, right? That just means that if an opportunity is to present itself, right? Let's say we're to see some type of failure to go higher, and then you see the internal failure to go higher. Okay, awesome. We now have a failed transition, and you now have a new target. That would be the ideal scenario, right? I don't want to just that's a little bit more riskier for me. But yeah, any questions, concerns with this position? I reviewed it on Wednesday or Tuesday, so like very straightforward. Bearish trend, CVOS, dual sweep, LGC, POI, TP. And that TP, if you guys are wondering, the reason why I did that TP is that low. Which honestly, I should have kind of milked it and kind of just gone this low. Sucks, but is what it is. Any questions, concerns with this one? This is kind of like my trade of the week, outside of like the break even we talked about with UJ, but that's already in the previous video. That's good, bro. That's good. This is a textbook setup here, honestly. Super textbook setup because the external aligns with the internal, so you have a very clear set of targets. But yeah, this is going to be a crazy weekly closure. So, hey, like, what would be crazy is if we get back like up here. That would be crazy. But my next reasonable target now is here. Yo, please mute your mic, man. Please, please, please mute your mic, bro. You know better. Is here. Right? It's like we're making pit stops and we're like traveling around. Pit stop 1, pit stop 2, pit stop 3. But you guys we're kind of seeing like a very substantial transition. Like this is big. Like sometimes I'm pretty bad with like noticing these very big moves. Like in real time, I kind of struggle with it sometimes just because I don't really care to notice it since I'm an intraday scalper. But this is very big, guys. Like think about it like this. We now have what? That's like months of data. That's almost a year of accumulation coming into play, right? And what this could mean, it could mean a lot of things, but hey, like I'm not gonna say like this is where we start like a massive move, but these big ranges mean something. They're very important, right? Like, and even if it is to reverse or like switch after we like take this liquidity out, if we are to then convert and then go lower, like it doesn't really matter what direction like it goes. I just know that because we've been accumulating for so long, the second that it does break out, and I'm not saying it's soon, but I'm saying the second that it does, like you're seeing a very big potential expansion. Like think about it like this, like this is obviously like on a bigger scale, clearly, right? But look at what big accumulations can create. Like big accumulations, right? We're looking at in terms of like risk to reward, like 7, 8 times the move minimum, right? Like shit scales, right? I'm not. This is just an example. All I really want to point across is that a big accumulation can signify a big move is coming, and that's really what I'm starting to note here. That's the important part of accumulation. This is why we trade transitions, because if you trade a transition, then you trade the beginning of a move. But if you trade the beginning of a move on a big time frame, then you're looking at a big expansion, right? This one, right? Turbulence points, boxes, accumulations, distributions. They signify the creation of a move. What direction it goes, don't really care. I just care that a move is coming. Volatility is open season. Also, I did see this really cool movie this week. I don't know if you guys have seen it. It's it just came up on like my YouTube, and I'm like, I was like working on some stuff, and I'm like, fuck it, I'll just watch it while I'm working. It's called 21. It's about blackjack. He was talking about how pretty much like approaching a game with a probabilistic view and a system so that you can beat the market or you can beat the house, right? And it's a really cool movie. You guys should watch it. It's a there's some cool little lessons you could pick on or pick up on that movie, and it kind of just reinforces like some of the beliefs that we talk about here. Game theory, exactly. Game theory. Yes, yes, yes. How one decision leads to the next, and then that decision creates new opportunities. And it's not really a linear thing. Um, like things really branch out. Oh shit. Like it's not really like a linear thing. This, that, that. Like once things start to branch off, like the possibilities become much more complex. So this is like kind of ties into what we just talked about, where it's just like I can anticipate where the next immediate move is, but after that, the possibilities really expand because you just don't have the information available to make that decision yet. Yeah, it's called 21, 21, 21. Really cool. It's like an older movie. Honestly, I really enjoyed it. I don't really enjoy movies like that. Um, but it's a really good movie, and it reinforces the fact that like what we just talked about, like I said, with looking for immediate moves based on available information. So the effect to the cause, that's immediate. But if you also wanted to look at this from the other or from another POV, it's like the system that you take, if you're consistent with it and it is showing some type of progress or results, then all you can really do from there is build on it. And if you build on it, then that opens the possibility to be more right or more wrong. So if we are to approach this game per se of trading with XYZ, then you have to stick to XYZ. You can't really add on to it. You can maybe subtract things because maybe that can lower the probability of XYZ or ABC, which would be the results. But pretty much all in all, good movie. Watch it all. Um, and just look, pretty much just pay attention to what they talk about with their system, how they go about their system, and protocols. A plus B equals C. A plus B minus D equals maybe E. Who knows? Like hopefully that makes sense. But outside of that, guys, I don't have much to talk about, honestly. It's a pretty slow week for me. I really outside after I got that EU winner, I'm like, you know what? I'm kind of done for the week. I'm just gonna work on stuff because this is like a cool thing I'm working on. Let me show you guys. Been working on this for like a couple weeks now. Trying to make like a little terminal. Shit. Trying to make like a little terminal. Really cool. And I think most of the stuff I can get for free. I don't have too much an API cost. So like I'm trying to make these apps, right? And I'm hoping like that I can, if I'm to charge for it, like the lowest tier, I want it to be extremely affordable for people. Because like I just know I'm gonna incur costs like databases and like APIs and whatever. But like I can make some really cool apps now, and like this is really cool. It's still kind of broken on some ends. Yeah, see, like, it's still kind of broken, but like it's a work in progress, right? But yeah, this is like one of the apps I'm working on. This is really cool. I'm not gonna show the rest, but I have other stuff. But yeah, hopefully I can get some stuff out like within like the next 2 3 months. I took game theory for business strategy in college, thinking it would be a blow off credit, and that almost broke me. Yeah, they look up this tweet, bro. Let me show you guys this tweet. Um, let me see, where is it? Oh, I know who I sent it to. I sent it here. It's like the math that composes like every decision in your life or something like that. Really interesting little um tweet. Oh, found it. I'll put this in the chat for you guys to look through. Very interesting read. Cool little read. But yeah, enjoy. I think you'll like that. Actually, I can. I really need to sign in on Safari, but anyways, let's go ahead and get to case studies. I'm not trying to spend too much time. PTSD, bro. That's funny. Um, yeah, bro. Like if you understand probabilities like that, you see why it's so difficult to like win in the markets and like to automate most of this stuff. Yeah, bro, my bad. It's a Zoom app. I'm gonna figure this out, bro. I need to find like a better screen recording app, one that doesn't drop frames. Or fuck it, I just need to get a new like better computer. But I don't think it's my computer. Try OBS. OBS sucks on Mac, bro. OBS is terrible on Mac. No, no. I do think it's a Zoom thing. Mm. But let's see. Okay. So we're seeing a transition, CBOS, completion, internal CBOS, unwillingness, break. Oof, I don't like this. I don't like that because if we're seeing this, then this is still potentially a CBOS. But more importantly, there's a big sign of momentum here. So it looks like this could continue lower. So if it buys, like it's good, but like the invalidation is here for the buy. Yeah. Like I'm sure this still went up, right? This went up, right? Like the invalidation is here because this is the sell to buy. That just sucks with over refining sometimes. But I wouldn't be surprised if this kind of flew from here because then it kind of swept the internal and then went up. I think hard. Let's see. What date was this? Yeah, but you always trade against the liquidity. It's always like I don't like the quote of like if you don't see the liquidity, like you are the liquidity. I think that's so like I hate hearing that. It's so corny because it's not fully true because there's like different manipulations on different scales and like there's like a hierarchy thing. But like yes, you want to trade against a sweep essentially, but what sweep you trade against is also important. When is this? E11th, 2 days ago. Oh, what the fuck? Yeah, see. So then I'm guessing here. So it never broke this, I'm assuming. So it looks like it never broke this. So now why was this bearish? Let's see. Okay, let me annotate here. So this is pretty much like where his invalidation was. Oh, this was already bearish. Oh, oops. No, never mind. No, yeah. So this, I can see why people are bullish here because like this is something I even noticed this yesterday. It's like you're trading pretty much you're trying to trade against that sweep, which is fine. But if you're trading on this time frame, then I would prefer to see something fail here to then play with that bias. But like if we're talking on the overall, like this is still technically in play. So I think we're probably gonna sweep this before you even consider thinking about going higher. And this makes sense if dollar's going up, right? Like, uh, okay, this is aggressive, extremely aggressive. You're picking a high here. Very, very much so picking a high here. I mean, I see why. It makes sense. Yeah, it makes sense. But your validation is what's making this super aggressive. Yeah, I see why. Like, I don't think I would have been able to find an entry here. Yeah, I don't think I would have been able to find an entry here. But it does it works out because where's your higher time frame? This one? Yeah. It works out because you have a bearish move, then you fail to break a high, and then you have an internal bearish leg, CVOS. I just don't see the transition here. So like if I don't see the transition here, and if let's say I'm trading something like this, then the invalidation has to be here, and I can aim for here. Whereas like if I want to trade the internal, like I would need something to fail here. Either this would be a failure, and then maybe that's a POI, or the entire buy to sell. But I just wouldn't have gotten that. Yeah, it's pretty much my trade. external, internal. Yeah, pretty much just like my trade. This is so aggressive. Another, it's just the same trade essentially. Looks like it. It's so aggressive and like they work out, right? This is the sucky. This is what sucks about trading like these risky high risk to reward trades. It's like that one winner will give you so much hope that like, oh yes, like I got it down, like I'm about to start doing this all the time, blah blah blah. No, like if you actually take the same trade or like the same types of trades, you're gonna notice how many times you lose here. And you can't really explain why this went right in the first place. Like you could say that it's the external trend or this and that, but that also has to be consistent with all of the winners that you take, because that's the only way you can take another trade that's like the same. Like the conditions that are there have to be very similar, and also the reason for it to win has to be very similar. So like sometimes this will win, right? Because you have a internal transition you didn't hear. Whereas sometimes it's just a POI here. But what if the next scenario doesn't have like a very good POI? And then how you define that is also important. That's also what like I'm just not a fan of like this stuff anymore. Like it's assuming too much and it gives you hope when it does win. But yeah, guys, do you guys have any questions, concerns? I don't really have much else to talk about today, guys. I've just been locked in with my stuff. How's this one doing? Whoa. Okay, this is good. I'm gonna need this to like think for me. Maybe we can see. That'd be cool. Why am I so against traditional POIs nowadays? I'm not against, bro. Hold on. I think you're misinterpreting me. I'm not against traditional POIs. I'm not. This isn't a POI thing. It's being aggressive with the positions that you're taking. That's what I'm against, because you aren't considering how easy it is to lose in these situations, because then you catch yourself loser, and then maybe that one winner will put you in profit, but the sustainability and the mindset that you have to have for you to take those five losers and then get the one winner, like unless you're actually doing it, I don't think people understand how like difficult that is. Like, could I do it now? Yeah, probably. I mean, I used to do it before. And I really don't care if like I win or lose. Like that was my solution. My solution was like, in order for me to not care about the losers, like I can't care about the winners. That was my solution. So like now it's like either way, like I don't care like what's next. Like, but for most people, especially people who aren't like as like meticulous as I am about shit, like it's not really a viable way of trading. It's not really a viable way of approaching the market, because you're already making a difficult thing so much more difficult. And like, it's not that it's wrong, bro, but like the reason why I've also kept all of my videos up for years, it's like you guys have seen this entire thing like mature over time. Like I genuinely think that how I look at stuff now is much more mature than before. Because back then, like I wouldn't risk $10,000 in the types of trades on one trade, on the type of trade that I would like take before. Whereas now, yes, it's much more justifiable because there's much more conviction, confluence. That's kind of what I mean with like maturing. So like the people that I do see trading this way, like I want to see where you are in a year, 2 years, and let's see if it's still that way or if you've changed something. And I want to see what that change is, because I've seen this stuff happen, guys. Like I've been in the game for years. Like I've seen this stuff mature in a lot of people in different ways. Like Brendan still takes like very aggressive trades, right? but there's actual consistency to his trades. If you look through all of his trades, there's a lot of consistency with like how he executes on the trade. So like he goes about it the right way. Whereas then like people like yesterday, like what I was talking about, let me see if I can find that message real quick. With Peter, I think it was. Um Damn, you guys have been active today. Okay, good, good, good. This guy's sharing now. That's good. I don't like when people are always asking questions and not providing value. This is crazy. Like, what the fuck, bro? Um. Anyways, you guys can find it. Just go through like my messages or something. Um. Uh. Yeah, no, I don't want to show my messages from the other chats. No thanks. Anyways, you guys can probably find it. It's somewhere in the chat. But like with Peter, he actually like took the time to digest everything, and he actually matured in terms of like the overall approach. And all I mean by like maturity is it's much more structured, it's much more consistent. Because as you trade, let's see like even this one for example, it's like these two trades are very similar, but you have to take this type of loser to take than this type of winner, but this loser is very avoidable. And that's kind of what I mean. Like, I'd rather take less trades, maybe even less R, maybe even less overall profit if it means that I take less losses. That just means I have quality wins, I have quality trades. Because really, that's what it's about. Like, not really the risk reward. It's about the actual quality of the trade. Like, what do you get for what you risk, and like how consistently do you have the risk? Right? I hope that makes sense. Would you trade oil? Nah, no thanks. I know there's like a good accumulation here or something like that. People were looking at, yeah, they were looking at some accumulation here, but nah, I'm good on this. I don't really trade commodities or metals. But yeah, bro, I'm not against traditional POIs. Like that should not be what you're getting out of what I'm saying. No trade. But yeah, any more questions, guys? Because if not, we can go ahead and wrap this one up soon. Cool, man. No more questions, guys. I need to save links and take before and after screenshots of my trade. I mean, damn, bro. So you're not tracking anything? At some point, I mean, not everything needs to be tracked, but I think unless you're consistent, then like you still kind of have to track. Like for me, journaling my trades won't help me as much as like trying to learn things in real time at this point. I have a lot of screenshots and before and afters on a concept board. Yeah. Um, do you ever use okay, do you have a Notion template? Do you ever use a trading journal? Do you think those are even like effective at all? Because I've been building one on the side, but I'm like, but it's kind of useless. Like it doesn't actually help. Like it lacks a lot of features, I think. And I'm like, you're charging $50 for this? Like that's crazy. 50 a month for like just to get a cute UI. Like I just don't see the value. And like if you want to implement AI, it's also very difficult because like to tell someone how to become a better trader in general, that would mean that they have to follow your approach, whoever is referred to as your. So like the only way I can help you guys is by giving you a bit of clarity based on what I see. But that doesn't necessarily make you better. That just gives you a bit more of context of how I see. And then if you are able to build relationships with that, then you can either change something or improve something. You know what I mean? So like making that AI side of stuff is very difficult. Like it's really hard to not be biased in that kind of stuff. And I didn't really know that until like I actually started using AI myself. Pretty, it's pretty annoying, honestly. Pretty annoying. So they're using a free journal template we recommended here through Notion. Refinement is limited though. Let's check it out. Send me the link if you have like I don't. I've never used Notion. Like I've had this like I have this big like annoying little like habit of mine that like I don't like to learn this like these new softwares and stuff because if I actually like it, like I'm gonna like obsess over it. So like I know that if I want to learn Notion, then I'm literally gonna like go all in on trying to make something cool in Notion. But who knows? Maybe I could even have AI try to build something like an AI journal or some type of journal. I don't know if you have the link to the template. We can check it out here real quick before I wrap up because I do have like a free hour or so. I usually take like 2 hours aside for this. Is this your personal one or is this a template? I don't want to just open it. I don't. You don't mind? Okay, cool. Let me. because I've never actually like connected Notion to like AI. I don't know. Maybe I could have Codex spin something up. Um, it's gonna probably ask me to 1 second. Hold on. I'm looking for this confirmation email. Oh, I mean, I think I opened it. I just showing this, bro. It's not showing like a bunch of stuff. I don't know. Like the only guy that I've seen that has like a decent like trading journal on Notion has been like I think his name is like Tom Trades or something like that. He had like a really good one. Okay, I like. I would just start tracking some type of statistics. Excuse me, because like this is good for like personal review. But you should add some type of statistics like let's say like the basic ones, obviously like risk reward, win rate, in the before and after. Like if you could do befores and afters too, that would be really cool. Um, which is like yeah, I guess you do that before and after. And then I don't know how you can add like the actual statistics, but obviously like your win rate, your risk reward, your um I forgot what the statistic is called, but there's a statistic that let's say like your position is here and your TP is here. There's a statistic that pretty much tells you, or like you can measure it so that you can see how far you went into profit before like a loser or something like that. Whether it's you could do pips and risk to reward. But like the reason why that's important is like sometimes maybe let's say out of all of your losers, you're able to see that your positions go like let's say maybe if your risk to reward average is like 1 to 4, then your position usually all of your losers go like zero point 0.5 R into profit and then they go to the loss. So then that would mean like at a zero point 0.5 you could either break even or partial. It's like stuff like that. You know what I mean? And then you can see like your average win rate and also put like time of day. Time of day is very important. Like you have the day, which is good, but then put the time of day as well because then you can categorize things based on your sessions. I heard some of them using a platform called Trade Locker. What do you mean? I mean Trade Locker. I wouldn't use Trade Locker, bro. Like I know some things on the inside. I wouldn't use Trade Locker. Trade Locker's no bueno. Trade Locker's not a broker though. Trade Locker's just a platform. It's like a MetaTrader. Transcribe. Never heard of that, bro. Let's see. Shit. Trade scribe. I've never heard of that. Oh, this is cool. I've never seen this before. Is this new? This is this is 100% AI made, guys. You can usually tell, like, especially now, like that I work with this stuff. Yeah, this is 100%. This is made with AI 100%. I'll check this out, bro. I'll see if there's anything useful in here. But yeah, guys, like I do really want to make like a trade journal for you guys and like the actual platform itself. Um, because I'm also trying to build like I'm building like four or five things at once, bro, honestly. So like hold on. I'll show you guys one of the other platforms I'm working on. Uh Trade scribe. But yeah, this looks cool. Like what are the features? This looks very basic. Let me see if I can log in and maybe there's like a free version. Fuck. Let's see. Fuck, my pet's dead. All right, I think I'm signed in. Let's see. But yeah, is this app new? All right, this fucking site is broken, bro. This is 100% made by AI. This website's broken. Okay, I can't sign in. Let me just see if I could do this. A lot of these guys are like, I would say a lot of people need to be careful with these like building these apps and stuff, especially if you're taking people's money and information. Like I'll tell you, most of these guys probably have terrible security. Yeah, but this site is broken. It doesn't work. Maybe it's not even released yet. Yeah, the website doesn't work, bro. Like it doesn't like I tried signing in with like three different things, like it doesn't work. Like, let's see. Yeah, see, it's not even letting me sign in. Yeah, this website's terrible. Never mind. But yeah, like I want to make something simple, but like I also want to add different like statistics that people don't use because like apps like these are like unless they're usually just like pretty UI and you're kind of paying for that. And like for example, like apps like FX Replay is really bad. Like it's terrible because it doesn't act you don't actually back test like the actual strategies that you're trading. Like you can kind of nitpick your way and like get like fake stats on there. That's why you can have like a 200% return on like um FX Replay, but then you trade and then you lose all the time. There's a lot of bottlenecks with that kind of back testing. But yeah, but this site I'll check it out later. But whoever made this is like a bad developer. But yeah, guys, any more questions, concerns? Anything you guys want to cover before we get out of here? I wonder where you guys are all at with y'all's journey, though. I don't know if you guys want to share or anything like that. Cool. No questions, concerns, guys. This is another app I'm working on. Let me see if I can actually pull something up here. Hmm. Okay, kind of. Yeah, it's still broken too, but this is like another app I'm working on. I'm trying to. I'm still working on trying to automate my stuff, and like I have like my own little like trading view. Still very broken, but it's a work in progress. Trying to hopefully get this to work. Structure is king. Market beliefs for the impact trading. FOMO is created by impulsive acts. Yeah, bro. It's a lot of nuance. Like like profitability isn't like you do this and you're profitable. Profitability is like a combination of getting something or a lot of things to very adequate levels. Like not only do your I mean, it depends on the type of trading that you do, right? But your system is like one of them. Your risk is another. You could say your mindset is another one, but then mindset can break down in many different ways. Like there's like beliefs, right? And then there's like your own personal development side. Like if you're insecure in general, you'll probably be insecure in the markets. Like, and I think that's like because this is like internal, and then like your environment also affects like your overall mindset. This is also like a big one. Like who you surround yourself with, like what you do on a daily basis. Like if you go fuck off and party all the time, you probably are gonna be around bad people, bad environments, bad vibes, and it will hurt your mindset, or it will change your mindset. But it's whether it's good or bad is like dependent on the person, right? Some people can do it, some people can't, right? And then with your risk, it's like there's obviously risk management, and then there's like other types of risk, like conditions in the market at the moment, and like are you able to read that stuff, which is part of your system, right? And then there's like experience as well. Why? Because like there's a lot of nuance to trading, right? That's why it's so hard to automate a discretionary strategy because there's just a lot of nuance. Like perfect example, like look at this. The EU trick question. How similar would it be to actually let me see. This is probably not a good example. Let me see. Okay, I'll do this. How similar do you guys think? Let me take this off. This potential sell scenario and like this sell scenario. I just did that for a different color. Okay, I'll do that instead. How similar or how different is this sell scenario to this sell scenario? They're both they're both post transition, so they're continuations of right a previous mitigation or a previous sweep, but that alone doesn't make them different. But the execution itself, where it's like trading the continuation of something that's already occurred, trading the continuation of something that's already occurred here and even here. How similar, how different do you think these moves are? I wonder if anybody can answer that. It's not like that difficult of a question. It's are they similar? Are they different? How similar? How different? Can I repeat it? Both of these scenarios are oh shit. Both of these scenarios are continuations to something that's already happened. That's why I specifically chose these. This and this. They're both continuations based on either a previous mitigation or a sweep, which is also a potential mitigation. How similar? Actually, I didn't even tap. Um, this one did tap here. How similar are these trades, or how different? Or are they similar? Are they identical? Are they completely different? Like, what do you think and why?
I could even make a easier example probably. Let me see. UCAD's probably a better example. Let's take two that actually look similar. They look very similar. Let's assume this does that. Okay. Actually, I'll leave that one there. Oh shit, wrong one. Here you go. Do these look very similar or very different? I think they're similar in the sense that they're both occurred after a transition. So they're both continuations, and the difference could lie in perhaps a different model portraying itself for the continuation. That's not wrong. That's like the first. That's like the initial way to look at it. But I'll come back to you. But you're not wrong. How similar do these look, and how different do they look, and what makes them different? It's technically a trick question, but it seems like Ace can answer it. What's similar and what's different? These are similar. And here's the thing: I don't even know the answer. I have to go look for it. That's the thing. That's why whenever people show me like their case studies and stuff, like usually the only times that I'm wrong with reviewing them are if something fails before it's shown, or there's no context on a higher time frame. So whenever we think conditions, right? Let's think of this one first. Whenever we think of conditions, whenever we think of conditions, like this is here, right? What makes this setup a quote unquote probable setup? And you guys remember, I think we even talked about this distribution, but context around where the model is present gives you additional conviction. What does that mean? It means where are you on a higher time frame? Like I kind of swayed away from this for a while And then I've come back to it where I used to think that top down analysis wasn't really like fully necessary if I'm trading like scalp or H1, but there's nuance to it in terms of, yes, the daily direction, the weekly direction, the monthly direction doesn't really matter um if I'm taking a intraday position, a scalp position, right? Whether it's for or against, because there's a lot in between, and then that should also dictate kind of where my biases are and like how to actually time those biases. But the nuance is that, let's say on the weekly, where like it was here, we have the context of this external move, which we're going to come back to the external move. But this external move is providing us context that from potentially a longer term POV, because this distribution is 10 years, this is showing me that from a macro scale or from a very external scale of where that position is, we are probably going down in the long run, but that doesn't really benefit me too much. So when I'm usually on these time frames, really the main things that matter are sweeping a high or low externally, because usually that's what leads for the internals to start to fail. And then once the internals fail based on the external being swept, that's how you see structural disruption. But this context is relevant to the H1 move, although it may be slight. So the same principle applies. Now let's say we look at the other one, right, where we're looking at this, where now this is potentially a position time frame or a position level of structure that we're probably looking at to go lower. Then the context of this now changes. What happens internally here is not anywhere near as relevant as what we did or as what's higher than this. Because, for example, if we're using the weekly, just this entire general picture, and then whatever's in between the weekly and the H1, then that's the conditions that are providing more context as to why potentially the H1 may work out or may not work out. And how you weight that is also important, but that's like another topic. But now, if you want to do the same thing with the weekly, then you now have to do the same thing in terms of time frames, in terms of scales and stuff like that, right? So now you see, right, that this H1, right, is being supported by a weekly sweep that's potentially still going to go lower longer term. Who knows? But that's just kind of how it's looking. And then obviously in between, you have a bearish trend, buy to sell, etc. But if we're wanting to now reflect on this one, then we have to go to at least a 3 month to even consider what conditions this type of position will be in, this one, right? And so now you can see that although we have two distributions, the conditions for them are entirely different. The conditions that are supporting this H1 move is the weekly time frame move, but the conditions that are supporting this overall sweep is much more different, where you can see that there's just a trend shift, unwillingness, almost, right? Not fully, well, technically here would be unwillingness, but then this could be potentially a sweep. But in order for this to be considered unwillingness, you would need to like break this, right? To then potentially go lower. So, point is, are these similar in execution? Maybe, but the probability of them going your way are entirely different. I'm not saying one is better, one is worse. I'm just saying that they're different. They have to be different because this is being supported by this, whereas this is being supported by this. This is being supported by a structural range. This one is being supported by an external sweep. Maybe the dimensions are a bit different, right? Like in terms of like H1 to weekly, obviously that ratio is completely different than like a weekly to a 3 month, right? Because if we divide the 3 month by the week, it's 9 weeks, right? Whereas the daily to the H or the weekly to the H1 is a much bigger multiplier. And that also matters, right? So that just reiterates my point where the conditions that are supporting the move that you're taking also matter. And most people don't even think of paying attention to that, right? They think I'm a scalper. So I should only focus on timeframes relative to that, which is yes for the execution aspect, but from the bias aspect, the external matters, the external matters. But obviously, the higher that you go, like the less important that it is in terms of how it influences you actually taking the position. But it adds context as to where price could potentially go in the future. So then you just align it, right? So the key to finding an A plus setup is not just the technical prowess, it's the alignment of the levels that you're referencing. So are these the same? Hello? Oh. So are these the same or are these different? They're both distributions. Same but different. Yes, sure. Yes, but no. No, but yes. That's the reality that we face with trading fractal markets. Like that's we talked about that before as well. The what sucks about trading these markets is that the same reason why they go up is also potentially the same reason why they go down, especially within FX. Right? Obviously, with like stocks and like indices, it's different. They're more so buy models because they've been going up for a longer term. So the conditions are telling you that they're more than likely going to be bullish. So if you align to that bullish narrative, then you'll probably win. That's why like we fumbled like back in like COVID, because if we were to have the experience now that we had with COVID, then you know what I mean? We would have not tried to anticipate this as a crash. I can actually go ahead and just put this together now. We would have not anticipated this to be a potential crash, but more so because the conditions are aligned to be bullish, then we're looking for the opportunities to buy longer term. And then now that's also why I want to. That's also why I wanted to bring up this whole DXY situation, because we're seeing an accumulation, and because we're seeing an accumulation over time. Once it really pops out, you don't get FOMO, because these are like, not only has it taken a long time for this to create itself, but it's also going to take a long time for it to reach its target, similar to gold. That's why if you're able to understand these relationships between time and price, and you understand the principles of transitions, then you can catch these very big moves, or at least have a very good longer term bias, right? Hence why we've been bearish on this for a while, right? So the point is, these are the same, but they are different, yes, but they're actually very, very different scenarios because of the aspects that are supporting the move. The conditions, those that's what conditions are in my lens, right? Because our number one asset is structure, our number one asset is solidified points, hands down. We use solidified points to build the entire mapping of how we read the markets, right? So if the only way for me to read top down analysis, and I only have like the solidified point concept as the foundation, that's why we build levels, that's why we build different levels of structure, and so you align them to get the conditions that are present. So conditions being impulse, consolidation, manipulation. Those are like the only things that can happen in a market. So now this accumulated over a bunch of time frames, right? How you then align them is how you can produce your conditions, right? Does this make sense? Am I making sense here or no? Is this confusing? Oof, this one's crazy. I'm very interested in this one next week while you guys answer. I'll just mark this up for you guys. No response, guys. Did I just lose you guys, or what's up? Does it make sense? And now, like, what is if it makes sense? Then now, what's the next move? How do you apply that? That's then the next question. Wow, this one's crazy. Actually, I can't believe I just slept on this. Next week's gonna be fun for this. But yeah, but no, don't ignore these. Ignore this right now. That's not the topic. The point is, do you guys understand what I'm trying to tell you? And if you do, then you should be able to apply it. And if you don't know how to apply it, then that means you don't know it. So that's why I'm asking. Because this is a very hard concept to grasp. Like this is why I'm so against like the whole like back testing, like simulated back testing, because actually you're not actually consuming the time that's required to take these positions. So like if you don't even so if you're practicing, right, and you're just seeing either loss or TP, then you're kind of getting into this loop of dopamine. So then when you're actually trading in real time, you get a lot of psychological like issues whenever you're in a position, right? And if you're already getting that just in the position alone, like that means you're not even grasping the conditions from a higher time frame POV. What am I trying to say? Like, look at the if I'm in a position, let's say there was a very good, um, okay, let's say there was nice little SD here, right? Low, high, break, but then this fails, and then that breaks SD. If I am here and I'm looking for this, right? And during all of my simulations or all of the back testing that I've done, I've seen this move play out multiple times. So I have conviction in taking the setup, but I've seen this go from here to here instantly. Then while I'm in the trade, while I'm seeing pullbacks or while I'm seeing any kind of retracement, your mind will panic, right? And that just shows to me that you aren't accustomed to holding these trades long, even though your conviction isn't taking these types of setups. And that's solvable, that's fine. But that's also implying something bigger, which means like if you're not even able to withstand a little bit of a drawback on this type of position that you know is meant to probably take a long time, because if you just reference like other moves, like this move to the upside took like 2.5 days. So like it's not reasonable to think that this won't take another 3 days ish. This is 4 because of the weekend. But if you're not even able to do that, to wait for these moves to come into fruition, then how can I reasonably expect you to be able to play out on a bias that's like, let's say if we're now bearish here, like how can I expect you to have this bias in your head and actually internalize and actually be able to use that information as context if you can't even hold a position for a couple of days without panic? Is am I making sense here or no? You want to be able to conceptualize the time required for either your moves to occur or to finish, and the amount of time that's required for these bigger transitions to not only play out but also what happens after that. It's proportions. It's all proportions, right? I'm kind of going on a tangent here, but I hope you guys are trying to get what I'm trying to say here. Excuse me. Time does not know price and price does not know time. What does that mean? What does that mean? Like, what does that actually mean? No, no, no. It's a question because I also don't want you to just like re re-say what I'm saying. Like, I want you to understand what I'm trying to say so that you can have an idea and execute on the idea. Like, sure, time does not know price and price does not know time. No, sure, they don't because they're different dimensions, but they work together, and that's how we build relationships, and those relationships build biases, executions, etc. All the chart is x and y axes, right? Y axis, x axis. The y axis goes up and down. The x axis goes only right. So therefore, price can only either go up or down, but time must move forward. So that's how you build these relationships. Like solidified points, a solidified low is essentially when time goes forward, price goes up or down, and it takes out a previous point that has already done the same thing. That's why you're able to go into M1 and then you have these are the current solidified points. That's what creates levels of structure because of these relationships between x and y axes. You could say level 1, level 2, and then I'm not really I'm kind of butchering this a bit, but I'm just trying to get the point across. Right. So solidified point is relationship between the axes that are present, but the dimensions of them begin through the rules of when solidified points break. But it's the break that makes them valid. That's why I'm able to create an emergent process for higher time frame alignment. You see what I'm saying? It's going to be hard to internalize this, but if you can internalize this, then that's very good because you kind of change entirely how you look at the markets. Right? Are you guys getting me or no? A lot of people aren't saying anything in the chat, so have I completely lost you guys, or like, are you guys understanding what I'm trying to tell you? And if not, like, what's confusing you? And then we can wrap up the Zoom. Kind of hard to grasp. Yeah, it's supposed to be hard, bro, because it kind of goes against like previous beliefs. Like the markets are completely gonna go against everything that you probably know already multiple times in order for you to build something that can make you any kind of success here. So, in short, these are very similar scenarios, but the conditions that support them are different. Therefore, the scenario is entirely different. Like this is like this ties into everything I'm saying with like the trade journals and stuff like that. Like you could say that these are both sweeps and they're both trading the sweeps, and maybe they both even win. But the conditions that are supporting this on higher time frames of the one that's present are very much so different. And those conditions are why it's hard to get the same setup to occur every single time or the same outcome. So let's say you classify this and this as the same type of sweep, they generate either equal or different results, but the data is more than likely not even useful outside of the practice that you're getting, which is building your IQ. But the data itself is almost useless because the conditions that support each one are different. Whether the because we just showed you that this is like a structural range being supported by a sweep, whereas this is a sweep being supported by a sweep, and that's just like off the top of my head. Like I haven't actually gone deep through and like shown you guys all the other stuff that can be involved. That's what makes it hard to journal. That's what makes it hard to automate this stuff. Right? Does that make sense? So I'm not trying to like make you guys like feel lost or anything. I just want to make you more aware of stuff. If you become more aware of stuff, then you can start to see things that you don't see. And then that's how you're maybe there's a rule that you make that you never knew you'd make before, just due to experience in the market or market timing or just increasing your IQ. But all I'm trying to do is give more context, give more ideas, give more things to think about, because that's the only way I've seen success with like teaching, and different things resonate with different people. All right, so I think we can leave it at there unless you guys have any more questions. That'll probably be it for me today. Yeah, but I hope you guys take notes on that. I'll probably try to make that segment like an actual chapter, so you guys know how to fall back to that, because I think that was a very important conversation. All right, guys. I'll see you guys next week.